This will be live. We're doing it live. Making sure everything's online. And we're good. Alright. So, let us get organized. And let's begin. Alright. So, September 27th, week of 2021. It's Monday, guys. I was so bored this weekend. I used to be so happy as a child. The weekend's here, I can watch Saturday morning cartoons. Now it's like, the weekend's here. What am I gonna do? I guess nowadays I just watch crypto. Alright. Oh, and this is not the theme I wanted. Why is it always switching back to freaking light theme? Who uses this blinding, disgusting theme? And now I gotta change all of them, right? Oh, okay. Alright. No, you gotta get changed. Dark theme. Why are you changing to light theme? Keep it dark, please. Something more comfortable and more depressing than dark themes. Alright, I'm gonna reset this. Alright. Got my caffeination. Got my graphs. Oop, got a spill. Gotta go. Let's do this. Alright. So, we're checking out the overall markets first. SPY, SPI. Oh, what are you doing, buddy? What are you doing, buddy? What are you? Please do not disturb. I'm in the middle of something. And cannot get a moment to myself lately. Quiet internet. Quiet internet. Alright. I hate the internet. So, okay, so SPY is not doing so good. Here's why. It looks like it's coming back. Okay, the overall trend has already dropped below our general uptrend. Now, this is a really freaking long uptrend. Really steep, really, like I've even extended it a little more than I should be just to match a few of the previous, but I would be more accurate to say that this is actually more like this. Okay? More often, this is the line of support on the bottom trend. We've dropped below it once, cool, but we have risen there. We haven't really dropped above or caught ourselves above it too much. So the strength in the upward motion is not as strong as the downward motion. That's my first concern. Within this upward trend, we're actually breaking out of it more times than we have broken up above it. That's my first concern. Second, this breakdown is huge. Huge. We are out of that trend. Now, normally, we call this a bear flag. The bear flag likes to go up, 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 and at some point it breaks down in the opposite direction. Now, I've given it potential locations that it can fall. I probably should color code it for specific strength. However, at the moment, we are below the bear flag, so we have already begun our deceleration of this upward trend. Not to mention, if you've been keeping track of all the craziness that's happening on in China, whether it's crypto, whether it's real estate, where is debt, whether is the U.S. debt not being renewed, and God knows, there's just so many things right now economically that is chaotic that I would understand this to be the case where we are stopping. Not only has technicals broken out, but the general everyday events of the world around us has already fallen apart in some form or is in the process of falling apart. Of course, governments don't want to admit it, but by data, it's becoming a little bit more apparent. So here's the second case I'm worried. Second case, we fell off. We had a huge gap fill. Okay, we filled it up. That's nice and cute. But this is a double top. This is not a good sign. This is such a perfect double top. It's just showing that we have humongous selling pressure. As soon as we reach, where's my drawing stuff? Oh, here. As soon as we reach this value of 444, 445, psychological number, everything multiples of fives and zeros, and even numbers. But as soon as we reach this, it just falls off. Now, in the past, big corporations like to pretend and support the markets to make them seem nice and juicy. Good buying, right? You drop it, just like we have seen it already. You drop it, you wait to see how many people pick it up, and you drop it again, and then wait to see how many people pick it up, right? So that's the pattern. What do they want to do? Why are institutions dropping it so they can see how many people are picking it up? They're doing this because they want to basically test out how much support there is on the downward momentum because they have large positions in these big locations. They basically probably have most of their investments in the SPY, SPX, and whatever. So they're trying to figure out, hey, if I leave right now, who's going to pick it up? And there's billions of dollars probably that they want to leave with, right? They want to leave with the money optimized. So when they sell off to make these drops, they're testing to see how good is the pickup, right? And they don't want to crash the market. So if the pickup's not good enough, they're going to try and pick it up themselves so that the trend continues because they don't want to crash the market. Because what happens when the market crashes? No one wants to buy, and they have a crap load of SPY and SPX and Nasdaq and Dow. They want to sell all of that. They want to benefit from the profit. But if no one's going to buy it from them, because remember, this is still a market. You are buying and selling a one-to-one ratio. If there's a seller, there's a buyer. But if there's a buyer and no seller, you can't make a transition. But if there's a seller and no one wants to buy, you are left holding the bag. They did this in 2008. They did this in 2008 when they made everything. I mean, look at the news. Just look at the news. The news, everything was fine. Everything was perfect. Perfect. Real estate boom, 2006, 2007, 2008. Everything is amazing. And what happened? Well, all the retail got their, or everyone that wanted to buy these mortgage payback securities, which were defaulting because they were giving it to crap people that could not actually pay off their mortgages. And they were giving 6 houses to one person that could not actually pay off any of them, let alone just one, but now 6. They knew there was a problem, but they wanted to sell it. So one bank sold it to another bank. They knew something was wrong. They didn't tell anyone else because if everyone else knew there was something wrong with the mortgage-backed securities, then they would not actually sell them, be able to sell what they have. So they didn't say anything about the problems in the real estate market and the mortgage crisis, right? So that's the problem with the news. They're not going to tell you what's going on until it actually is too late. And what's going on now? Well, right now we've got a lot of market turbulence, economic issues, and turbulence on top. We've got China having some real estate issues, almost reminiscent of Lehman Brothers back in 2008. We've got the US government running out of money and having a debt ceiling that will not be raised. And now they're trying to figure out a way to efficiently use the money they currently have. It's just chaos. So this drop is understandable to us leaving our particular trend. Don't expect it to come back up here. No, no, no. I do not expect it at all. There might be like a 5% chance that, if these market makers, the institutions, the smart money, they want to make it look like everything's okay. They will buy it back up and go up here, but I think they're running out of juice. They are not able to buy it because they're in the middle of they're involved in a lot of shady stuff. That money, the big smart money, they're involved in a lot of shady stuff, which we can talk about AMC, we can talk about GME, we can talk about all these super shorted companies that they're getting screwed over because, well, they're playing with fire. But they're potentially also involved with the Chinese real estate market. That's what we're probably experiencing now. That drew it over the top. $300 billion dollars that cannot be paid off to investors, to banks, to debt, to creditors, to anyone that helped Evergrande build those buildings, cities, etc. They cannot help. They cannot assist and pay back the money that was given. So potentially, we have a lot of U.S. banks participating in China's growth because, come on, how much patriotism is in profit? Tell me. How much patriotism is in profit? If you can make money somewhere, do you care about who you're supporting? I mean, look at wars. We've sold cars and weapons to both sides of every war. Why? Because of money. So don't tell me that our banks are not going to be involved in Chinese real estate, thinking there's a lot of money involved in the profits that they could be made. But now, since Mr. Evergrande, ever so big, cannot pay off its debts and has a lot of money to return, I don't think we'll be seeing a pickup from here. Our institutions cannot handle this continuous trend of making the market look nice. We've kind of talked in the previous video that this already looks like a very, very, very overblown pattern. It's too steep, too steep. If we take a daily, look at how calm it was before. Look at this sort of 45-degree angle here. I mean, the degree really differs by the time and timeline that you pick, but just look at this smooth wave up, small crash down, smooth wave up. I would assume we should have went down like this. Smooth wave up, but we're not going to be going high like that. We should be going like this and then like this. We should have a consistent growth, but it shouldn't be at this. This is just a huge abnormality of the whole market. In fact, we've seen it here. We've basically seen it here. This was a huge weirdness here. This was also a bit of an extra growth. The slope is too big. The slope is too big. If we really do look back in the past, it really should resemble this sort of format. A hill, we grow, we drop, we grow, we drop. And in growth, in a stable, growing, great, nice market, we should grow the hill and then drop at a higher level. So we should really be looking at a nice market. This was a weird thing here, right? This was like that. We should have saw maybe like this, like a nice growth, right? And then we should have dropped like this. There's always going to be a crash, no matter what. Not a crash, whether it's a institutional crash, correction, but there's always going to be some sort of growth and a crash. Like this is my generally healthy prediction on the market. It should be something of a process like this, right? And this is a long period of time. We're not looking at 20, what? I don't even know. We're beyond 2030. I call it 2050. This is like 2050 location, right? But the market doesn't quite follow this nice stable growth. We've just had this extreme hyperactive steroid moment. And I believe we really did leave this area of support. We had this inflated growth with technology and everything growing, and there's just too much money in the market right now based on the actual progress of the market. The market's doing great, technology is doing fantastic, but not this fantastic, right? So we should have had a nice growth pattern like this. New highs, new lows, higher lows, new higher highs, new higher lows. A nice consistent, this is how a market should technically function. And we've seen it in the past before in a slightly, same peaks twice, but 2000 crash, 2008 crash, etc., etc. I mean, honestly, this should have been the crash here in 2015. There were some events that I forgot what they were, but 2015 should have been an actual crash that went down a good amount, like to where I've drawn, or maybe even below, further down, right? So that's kind of the issue. This didn't crash; they just kept on supporting it. And then we had these weird micro crashes in the middle, but here's where my newest kind of considerations happening. We have a reverse cone. It's not good at all. Not good at all. We have a reverse cone forming. You can call it a reverse pennant. And who knows? Maybe it could be continuously going, but we're going to be seeing some form of up-down movement like this. Who knows? Really. Now the market's just so crazy and unstable based on how much money we're printing out, how much money we're trying to support the market to continue its growth. Because we're only thinking about markets right nowadays, right? It might have this pattern, but who knows how many times it'll do this before it completely breaks down and maybe continues the healthy pattern of before. But as far as my particular prediction, we're looking at something like this. We're looking at a huge crash down, basically 50% crash. We go up 250%. We go down another 60%. We go up 300%. Honestly, 400%. It's going to be weird. I mean, we may not even reach the end of this particular pattern. This is just a big guess. This W is a guess. But pertaining to the pattern, we're having such sharp breakdowns that we could see some form of huge alternation, oscillation between these two locations as we continue to grow, right? As we continue to experience these weird crashes and whatnot. Something within these lines. So, a summary, I'm not involved. I'm not in the SPY. Maybe if it crashes down here, I'll grab that. But I'm not involved up in this corner. Because again, like we mentioned before, this is abnormal. And this last piece of the crash is a very weird crash, considering the events happening. And I mean, you as an individual investor are basically versus the institutions. You're holding a couple of shares of SPY maybe, but the institutions are holding millions. And if they got to pay their bills, they got to pay their bills. So they got to sell what they have, their assets. They got to liquidate whatever they have. We'll talk about what they might be liquidating in order to cover what, because that's the next subject. So these institutions are kind of being held by the balls. Who knows if it's China holding their balls, if it's AMC holding their balls, or the government holding their balls. Something is preventing them from continuously, simulating that the market's perfect. And this is where we finally dropped. They just had enough. Look at these small micro crashes here, micro corrections, excuse me. And now this was extreme because if we didn't have this huge gap down, I would be a little bit more optimistic. But this gap down, I mean, overnight, it dropped such a huge amount. It did, of course, gap up because we have a gap fill situation. That's going to happen very, very often. But this gap down shows me a huge breakdown in control of the market. So, and on top of that, on the micro level, we got a double top. This is not a good sign. We got a double top at 445. We can't break that. We're going to be looking down. I think we might be reversing to a bear market very soon. And who knows how quick it's going to be. As they say, stairway up, elevator down. So it could be a nice drop down. It could be just a huge old collapse down, but it's worth paying attention to the SPY. It could reverse, but I have a higher probability optimism that it's going to be going down. So that's the SPY, the S&P 500 and the American markets. I like to also go on to my market analysis of the Feds, what they're doing. So the reverse repo is dropping a little bit. I mean, a little bit's a little bit, but that's still not enough. The reverse repo is dropping, but it still has a very, very, very high trend amongst it. It's just worrying because the last time we had such a huge reverse repo activity was in COVID times because companies needed money. We had to do some movement between federal money, federal reserves back and forth. But this is extremely abnormal. There's just so much money being literally almost mechanically converted between government and corporate. Like it's almost mechanical. It's almost automated. That just the trillions, $1.3 trillion are moving back and forth overnight, as if trying to again, emulate the balance sheets look nice. We have the cash for all the liabilities that we're owning right now. I'm not gonna tell you where we got the cash, but government kind of gave us this until tomorrow. We got to give it back. But next time we write our documents, we're gonna ask the government for that cash so we can emulate that everything's fine. So I don't know. It's a systematic obstacle course, or even more like avoiding the obstacle um, by basically handling money you don't actually own for treasuries and paperwork that it's honestly just the federal economic interaction is, what's the word? It's a messy sewage of crap. I think that's the best way I can do it. The whole plumbing of our economic system is just so overly complicated, so unnecessarily complicated. I mean, honestly, ever since gold became a non-standard, it just became more and more complicated for no reason, only so we can have bankers handling bullcrap, and now they're confused and they don't know what's happening because back in the housing mortgage crisis, they didn't know what they were buying, CFDs or whatever the hell they were called. Regardless, it's just a huge crap pile, just a huge crap pile, and that's your definition of the economic pipe piping, plumbing of the United States of America. But it should be optimism, right? Well, where do we look for if potentially our general markets are not going to play nice? Yeah, yeah. Where do we look? Well, we can look to crypto. So let's check a crypto. I think I want to do one more thing. iShares, Trust iShares, liabilities, capital, Vanguard, total bond market ETF. Liabilities are increasing. Repos are increasing. I mean, I would say repos, reverse repos are increasing just as liabilities are increasing. So that's, I don't even want to say that number. The transportation ETF normally, as they say, is by pattern, follows the pattern of the S&P in some form based on strength. I mean, I see it. I see the transportation ETF following a particular pattern, but I would say it's more healthy. I think probably exactly like, yeah, look at it. I mean, now it's not, but there's your healthy transformation of growth over time. A hill, a correction, a hill, a correction, a hill, a correction. It doesn't have to be perfect. And then this last moment, like that's a healthy growth, but this last moment is not even a hill, it's just a straight up rocket shot, right? And now from here, we're kind of dropping, and who knows how far we're going to drop from there. So this is a healthy growing process. There's always going to be a correction. Markets don't just go up, but there are situations where corrections happen, and we have to keep that in mind. It just depends on the risk tolerance over a long period of time. But for now, delete that. For now, we look okay. We're falling with the SPY. It seems possible bounce back, but I would say a lot of resistance within this location. So we are seeing already a pullback from that location, considering the previous support resistance locations at that exact piece. So if we can break through in transportation, we could see a SPY growth and recovery. But if we cannot break through it, then the SPY is going to take a biggest dump in the world. So now to crypto. Ethereum, back on the bandwagon. We've got ourselves a good possible recovery, and we're hitting it twice up top with a good stabilization at a closer bound. So now I would hope to possibly see a higher low, possibly somewhere around the last support here, and here, and here. So we should kind of come back down, bounce up, get enough momentum to bounce over this previous resistance. We could be approaching back to our volume profile resistance. This is going to be a huge battle because a lot of people are doing transactions or buys and sells at this location. A lot of volume, especially over the 4 hour. If I change this to the daily, we're fine. The daily is way below us. If we do fall below, we are going to have a 2,325 balancing point support there, very strong support. However, in the 4 hour, which means in the possible 6 month period, we're going to be struggling potentially with this volume profile line here, this resistance. So we're going to find our way up, but possibly break around here. We're not going to see 4,000 until maybe next year, maybe, unless there's a huge rally in crypto. But lately with China's news and they're making it illegal, it's just chaos also on the crypto side, to be honest. But there will be small bursts of energy. Solana has been quite the growth subject, and I've been keeping an eye on this sucker for a while. We're already above the 4 line. We have great support at the 4 hour volume profile line. So a lot of people are willing to buy at 139 to $140. This is going to be a good support. We are starting to see higher lows, which means a continuous process up, potentially going further up. We're not going to see this huge growth again. I think the price of Solana has been stabilized at what it should be based on its potential competitiveness with Bitcoin. But potentially, it could have another burst once it kind of calms down a bit. Total crypto, looking kind of doji. It's not making any decisions. This is total 2, so this is small caps. These are everything except Bitcoin. So Ethereum, Dogecoin, Cardano, Sol, every other crypto possible except Bitcoin itself. All the money in those. We're seeing a bit of a staggering. There's nothing really happening here. It's trying to make a decision whether to go up or down. The total, which is all of it, including Bitcoin, is under the volume profile line. It's not good. It's not good. Let's see where the total 2 is. It should be also under the 4 hour. No, this is the daily. Let's see, 4 hour. Yeah, it's also under the 4 hour. So it's not doing the greatest, right? Oh, wait. Total 2 is above on the daily. So I'm seeing super strength in the alternate coins. I'm not seeing a lot of strength when it comes to Bitcoin being involved. So the daily candles, they're below the volume profile, but on the daily total 2 candles, we're above the volume profile. What this tells me is that people are looking a lot towards the alternate. They're not looking at Bitcoin anymore. Bitcoin's going to stay where it is. I mean, they can balance out within the 40,000, 50,000 area, but it feels like we're going to be staying there for a while. But a lot of people are focusing solely on the altcoins. I could say this is a double top also, though. Huge double top, which means a possible correction down. But this on the total 2, we kind of have somewhat of a double top, but it's really going to be more of a lower high, a high, and then a lower high, possible lower high again. So a slow creep down for correction over time. So crypto's still a good play to go in and come out. I wouldn't say long. I mean, I wouldn't say 1 or 2 years is a good time to hold, but I would say if you're holding for 10 years, buy and hold. There's nothing wrong there. But if you're going to be playing crypto on a trading process, not an investing process, but a trading process, just look for the lows, buy them at the lows, and it's going to go back up to another resistance point, sell it at the resistance, buy it at the support, sell it at the resistance, buy it at the support, and continue the pattern. So crypto is good. The money making. I don't see a huge crash coming down anytime yet. And that's, oh, and one more thing. Let's see all of these shorts. Bitcoin shorts, low. Ethereum shorts, medium low, pretty, yeah, medium low. Cardano shorts, super low. Cardano is one of the ones I'm very much looking forward to. And Solana shorts growing, but still extremely low. Or they were growing, now they're stabilizing downwards. Cardano has been doing good in the last few days. It has grown from its attempt to go down at underneath 194. So we got a nice stable resistance there, or support. It does show a lower low, so potentially we could see a lower low until the trend reverses. We can actually draw a bear flag, and just like a bull flag eventually drops down, a bear flag eventually goes up. So we could kind of follow this downward trend a couple of times, potentially down to the volume profile line. And then, I mean, the volume profile is probably going to move up also with the demand. And then eventually we'll be reversing back into a bullish territory for Cardano. So we could see it go down to 150 potentially. But no guarantee. So if you don't have any now, you'd be missing out. So I would say have some at a dip, not 100% of what you have, but buy some. Nibble your way down. Wait for us to hit the specific 150 area, potentially down to the volume profile on the daily chart, and then buy the rest of the volume profile. And then the reversal should come around there. But it could also easily come up from here because it is developing somewhat of a attempted. Oh no, this is actually reverse. It attempted to grow, but it got pushed back down. So we potentially will continue the downward trend, at least for today. All right, AMC, the bread and butter. Now, I found some very interesting patterns with the AMC saga. Someone else actually showed them. I'm not sure what the heck this trend is doing, but it's not doing what I want it to do. The logarithmic growth is actually very, very, very attractive to me and shows off a lot of nice patterns. We essentially can draw a type of bull flag or bear flag, but every time I edit this, it gets weird. Oh, no, it's fine now. There we go. A little too much there. No, I'm not even in log mode right now. Log. There we go. It works a lot better with the log. Log just kind of balances everything out to a nice patternless logarithmic format, which shows the pattern I've been looking at very, very nicely. There it is. So we're seeking growth soon, very soon, potentially in the next week. You can see the growth has stabilized, and because log kind of works in a nice balanced format, you're gonna have a lot of bigger movement at lower prices because it's easier to buy, and smaller movement at higher prices because it's harder to buy, especially in the upper motion. However, log kind of balances everything out. This is just a mathematical feature, a statistical feature of logarithmic functions. It balances it out, and we're potentially entering. I mean, they're pushing hard down, so I can even adjust this a little bit like this. See, this is where it gets weird. Okay, there. So each time we drop, we have this, but we did technically break out from the typical log. I'm not worried though, because it's not over. We are trying to attempt to go over our 45 mark. It's a huge battle because, again, this is not a natural growth. Why is it not natural growth? Well, because big hedge funds are very much scared of the possible extreme growth of them trying to cover the shorts that they owe. They have to buy them back. Buy back the shares that they put on lending or that they were given to borrow from a lender. So they're not trying to buy it here. Otherwise, we'd be going up whatever, however long. They're holding all of their shorts because they don't want to buy to cover their shorts, because if they do that, it's just going to straight up go. So there's no natural component to the growth. That's where I don't like the log. Log tries to replicate a natural growth. We won't have this with our AMC because it's not natural. It's not a natural buy and sell, supply and demand. It's all fabricated based on extreme shorting to try and push the price down by big hedge funds and institutions that don't want the price high. But the pattern is very obvious. There is a level of support at some point in time, about 50% of the previous growth. We might drop down to that 50% around here, which is about 28, before we skyrocket again, right? The pattern does kind of break off. We had a huge slump down and then a smaller slump down. Here we had a huge slump up and then a smaller slump up, right? It's almost like a reverse pattern of the before. So I'm not expecting to find any patterns in between. I'm mostly looking at the fact that what's the lowest and the highest that we got before, where was the location in which we reversed for that pop-up straight to a new squeeze, whether gamma squeeze, whether short squeeze, whether whatever, FOMO squeeze, right? Where was that value? That's about the 60% mark, right? So we were at 2, we went all the way up to 20. We're looking at the almost 50%, 60% value before it actually blew up. Looking at the log, it's not going to be an exact value. Again, we're looking at not true values of numbers, we're looking at logarithmic numbers. But we are approaching that, so we might drop down within that same drop down, straight up. Support line here is really strong. And considering that what we had in the past, fundamentals, right? So we can now introduce a little bit of fundamentals into our AMC. Because COVID is essentially either done or being ignored, which is honestly up to your perspective on what you want to do with it. I've got my shots. I'm not getting any more shots, no matter how many booster shots they're going to go for. But in the end respect, the pattern of fundamentals are starting to pop in. And $30, $31 is a fundamental strength for AMC because they have had good times in the past, right? COVID is the thing that actually got them to break down. So as soon as we reach this value, people are going to buy based on fundamentals because currently fundamentals on AMC have been great. Look at the first earnings, right? We had a small negative, 91% negative, right? Then we had a 6% negative. Now we have a 24% positive. The growth is immense. It is reversing on the fundamentals extremely well, extremely well. So those fundamentals after this green earnings day have now started to give us a nice look based on what we had back there. 14%, 41%, 52%, 8%, 154%, right? So we had some good ups and downs. That's a huge negative here. That's probably, no, that's before COVID. Interesting. However, we are at the percentages perspective based on the numbers at that time period. I'm not looking at the actual earnings numbers, obviously. I'm just looking at the percentages. So take those percentages with a grain of salt. But as we have started from a very low 73 negative to a 91 negative, now 91 negative to a 6 negative, and 6 negative to 24 negative. The reversal for fundamentals has indeed been achieved. We just need one more. They're estimating a negative, of course they are, but they estimated a negative here as well. But look at that, the actual earnings came out nice, right? So the earnings should be very nice. They estimated a negative 94, but the surprise was that they got a 24 positive. Very nice. So if that's the case, they estimated negative 94, but we got a 23. That's about a 70% difference. If we're going to get a 54, 70% difference, it's still about a 30, 40%. So we may see another 30, 40% positive growth, especially with so much demand for movies, so much expansion of the AMC company, not only showing movies, but actually showing, sports games. I think they're going to be doing esports. They're just all over the place now. So earnings, the green reversal is very nice for us, as long as it stays as long as it continues, as long as the next earnings is also green, which is happening in November 8th, 9th. But because of the eyes that are now currently on AMC, I honestly feel like the earnings are going to be extreme because AMC is more than just a company now. The AMC idea, the reason why it's doing these short squeezes is because it's now become the what was that? Walk on Wall Street. Walk on Wall Street? The protest, right? So it's become the protest. They tried to protest live in person on the Wall Street, didn't work out. So now people are not doing protests in person in front of buildings, but they're protesting with their cash. And this is the outcome. They are literally grabbing the hedgies by the balls. And now when the hedgies need to return shares that they've borrowed, they're paying higher prices than what they sold the borrowed shares for. I kind of explained a little bit about how shorting works. I buy a car or I rent your car that's worth 5,000. I sell it for 5,000. I literally sell the car that you are letting me borrow. Okay, why am I doing that? Well, because it's illegal. They can do that. And then as long as I give you back the car, it's a-okay. So I'm thinking that the car price is gonna go down. So I sell it immediately for 5,000, and I'm hoping it's gonna go down to 2,000 because I heard that the car manufacturer messed up on the engine. The value of the car is gonna go down. I have inside knowledge. Just think of the banks with their inside knowledge, right? But what happens? A bunch of apes saw that I was selling a car that I did not own, and they said, "Hey, I'm gonna buy all the cars in that same car in his neighborhood. I'm gonna buy all of them. I'm gonna make him pay more, so he can buy it from me for $10,000. So I would have to eventually return your car, but I sold it for 5,000. And now these stupid apes with their bananas, they bought all the cars in the neighborhood, and I cannot find a car to actually buy and return to you. Now I gotta look on different markets, which now the demand is so high because these apes are buying up the cars and the supply is running low. Supply and demand. So now the price on the whole market is huge. Now it's 20,000. So I actually have to pay $20,000 for the same exact car that I sold for 5,000. Me hoping that it would be cheaper so I can make that little bit of a difference. Heck, if it went down to 4,000, I sold it for 5,000 and I bought it back for 4,000 and I gave you the car back exactly as it was, I would make that 1,000 difference, right? But because the demand is so high and these apes bought up all the bananas, aka shares, aka this car, the car price boomed. And now I have to return your car. You're getting impatient. And not only that, you started charging me money for every day that I don't give you back the car. And now the car is up at $20,000, $30,000, $100,000. So I gotta actually lose money so that I return it to you. This is what you're seeing in the AMC chart right here. These are the people selling the car at a low price, hoping that it gets lower, but then the apes buy the shares and drive the price up. And then I have to buy that car back for a higher price. And maybe I'm not the only one that's doing this cheesy ass way of making money. And there's a bunch of people that are borrowing other people's cars and selling them and then trying to buy them low. So we all have to lose money on the same exact tactical way to short things. So now we're all buying the cars back, and whoever buys it first gets it for the lower price. So we're all scrambling to buy these back because we don't want to pay up here. We want to pay somewhere down here, right? So short squeeze in car and banana format. So that happened twice. If it happened once, everyone was like, "Oh, it's done. Nothing's gonna happen. Nothing's gonna happen. Nothing's gonna happen." Happened twice. The media even said it. That was it. There was nothing gonna happen, and there was no more squeezes. The media. Don't listen to the stupid idiots on the TV, please. They're there for a reason. They're there to make you think things that aren't true. So media's like, "Oh, it's done. It's going down," and then boom, went back up again because they had to cover it. It could have been regular people buying. It could have been the actual shorts covering, right? We do have calculations that from here to here was 20 million shorts covered. 20 million cars covered, and from here to here, another 20, 30 million cars. So raising the price at about a 600% rate is about 300 million shares, 30 million shares of that AMC being covered at once. So potentially another 600-700% growth from here would be pretty high, and I do estimate it to be around this 2 to 300 value if we go soon. The longer we kind of stagnate, though, the higher the price is going to be in the end, because they're just shorting it. This is them doing the same thing. They're shorting it down. They're lending your car, selling a shootload of cars on the market so they can drive the go over in a second because those apes. So they're watching the data to see where are those shorts and where can I put my money for an easy gain? Where can I screw over these giant institutions and make a couple of bucks out of it? There's an active cultural marketing trading technique now. People are purposely doing that. They don't know the full details because they're looking sometimes at the data that, yeah, it could maybe be kind of that, but you need a lot of pieces of data to really be sure. So, yeah, we're gonna go over that data for this week. That's kind of my plan. So AMC on the trend. We're going. We're not stopping. We're stabilizing at this location as it looks like. Today's been an okay day. We're just kind of hovering over the 39. Let's take a look at the normal chart. Excusez-moi. Without these crazy things happening here. So here's our open today. Cat here. Was a decent burst up, nothing too fancy. In fact, I don't need all these guides either. So we had a decent run, but not much. I don't really trade in the beginning 30 minutes of the day, an hour, I wait for the calm down. It's just hyper volatility. A lot of people buying, a lot of people selling, a lot of people buying. It's just not going to show you any natural. You can try and play with it. Sometimes it goes up and then down and up. Sometimes it just goes down and then up and down. It's just, yeah, most of the time like here. Last Friday, it went up, down, 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 up, down, down. And now it stabilizes to a more natural flow, right? On Thursday, look at that. It went down, then it skyrocketed up, and then it dropped super down, and then dropped super down. Again, the pressure is all in these shorts that are trying to push the price down. They're trying to sell as much as they can borrow in order to push the price down. They're borrowing everyone's car in the whole city, in the whole country, and putting it on their lot so they can reduce the price. That's what they're doing. And then they got to return the car, obviously, because you're borrowing it. So I just don't do much on the first hour mark, especially this. Look at this. This is just ridiculous. That's 5, 10, 15, 20, 25, 30, 35 minutes, 40, 45, 50, 60. This is the hour mark, right? It's a huge drop down. I try not to buy or sell within the first hour mark. Because eventually we go back up anyway. Anyway, back to today, nothing. I mean, what I can really do here is consider that this is just another wedge that we're probably going to break up from or down, but I don't see it down unless the selling pressure is trying to do that. What I've noticed is when we form these things, these pennants and these particular technical trades, because they know that most retail investors are looking at technicals. They're not looking at fundamentals, obviously, because fundamentals don't have anything to do with AMC in general, but they're coming back so we can kind of take a look at the fundamentals. But most retail investors are looking at technicals. So when it gets to a nice shape, institutions say, oh, look, it's a pennant. We created a pennant. Now let's break it down to make the retail investors get scared and sell their shares. That's why I don't sell. I just hold my AMCs and I play other plays. And when I make money from other plays, I buy more AMC. That's it. That's why we're up at 40 now, when back a couple of months ago, we were down at 140. So we're 4,000% up and stabilizing 4,000% above from the year. Now, I kind of want to explain what I'm drawing here, but I don't really because it's all theoretical. I'm using the pattern of the first growth to predict the second growth, potentially predicting the third growth, potentially predicting the fourth growth. So I'm not going to move any of these possibilities, but if we have multiple shorts covering, and if 30 million shorts causes a 600-700% increase in price, then we could reach, I think I estimated on the third squeeze, whether it's gamma or real or partial squeeze. On the third squeeze, we're going to get to about 200, give or take 50. On the third squeeze, fourth squeeze, we're going to get to 700. Yeah, we could get about 600, 250 to 600. And I did have more squeezes, but I think I removed them because I don't want to overexcite myself. I think I did get to like a $20,000 value for one share, probably in 2023, 2 years from now, if they continue to play the stupid game over and over. Right? It's not a winning game because, I mean, really, it really depends on the patience of the apes. And I think so many people have made so much money from AMC that they're just coming back in. They're using the money that they won from the house, using it back to continue the process. So I honestly don't see this as a winning game for the hedge funds at all. But it could take a long time. It could take up to 2023 for us to reach 2,000, 2024, 2025 to get to 20, 30,000. If, big if, the apes are patient enough. So that's why I'm not drawing anything other than the third and the fourth. And the fourth is already a little bit like, shoot, try and see. I don't know people's patience. I have a lot of patience. I know a lot of people have a lot of patience, but is it enough? How many? No. Give me a percentage and I can probably give you a good estimate. But in the general form, it's still following my trend here. I haven't really changed anything since I actually drew it. These lines here was my reversal line. Around here was supposed to be the reversal on the way I have two. So I drew a line based on the reversal, based on the halfway point here, somewhere halfway. Yeah, which was the reversal here. It went down, but it came back up. It was some other thing I did here. I can't even explain this one. However, the bull pennant is working nicely. We burst out the bull pennant, however, we fell back in and are stabilizing on the outside of the bull pennant. That's the important part. We can stabilize here. In fact, we can go on it. But the key is whenever we do this, when demand bursts, the volume grows. If we can see a nice closing day outside of this triangle, today is the day to do that. If we see a nice close outside of the triangle, again, for the second time in a nice fashion, the volume should skyrocket because people are going to be like, this is it. Technical points that we are on top of the bull pennant and it's time to rocket. And not only are people going to buy algorithms, they're programmed to do this as well. They're going to buy. Hedge funds have to buy because they still got to return the shares. And options will start getting covered as this growth escalates further and further and further up. Okay, so we're on a good path. All I'm saying is we're on the path of growth. Based on my pennant, based on the log I showed you earlier, AMC is doing fantastic. I don't know what to say. It's literally showing all the patterns of positive growth. The fundamentals are being strong. The Fibonacci sequences are within the right places. The green is where you want to be on for the next growth. As before, we were in the green before we burst up, right? We are in the green again before we burst up. In fact, we were so green, we were in the dark green, which we didn't really do that often before. This time, we're in the dark green a lot more than we were before, so I can even say we're much stronger now than we were back in January and June. So the January to June timeline, we're almost double the strength because most of the time there we traveled down here. We traveled underneath even. Look how far down we went back to the red Fibonacci sequence, 6% for 23, right? But this time we didn't even reach there. That's 25. And you know why? Because the fundamental value started playing back into the game. This fundamental value of 35 has kept us within the green space because that is where the fundamental value of 35 is. It's in the, the Fibonacci retracement. So we had literally no activity in the red. We tested out the light green, but we basically coasted on the green green. We even stayed in the dark green for a while, more above it even. We stayed up here. So the pressure is on because the technicals are looking very juicy. And I just have to keep talking about it. Like, there's no bull. I cannot find a bull situation, a bear situation for this. I cannot find a bear in which this is gonna fall. Even if I find some bear like, oh, this is a double shoulder going down, I'm still gonna look at the fundamentals and say, hey, if it goes down to 30, 35, people are gonna buy it. Even fundamental traders are going to buy it at 35. 30. 30 will be a steal because the previous peak in the fundamental positive days was 35. So they're going to buy it at 30 and they have a +5 growth at least, even if they don't believe in the squeeze. So I cannot find a bear argument anywhere. I can't even find it in fundamentals anymore. Right? That's the thing about arguments and um, the, what do you call it? The smart money that talk about all of the numbers of a company because numbers change. They can talk all about the numbers as they want, but numbers change. So in the end result, this day today, no negative fundamental or technical patterns shown. We did have negative fundamental here with the negative earnings twice, but the technicals were positive, and we still went up because technically the technicals are being backed up by shorts covering. So now here in a situation where we're doing twice as good now between June and September than we were doing between January and June. We're doing twice as better on the movement, momentum. And the fundamentals are also supporting us on the back end. I just cannot make a bear move at all. There's no bearish anything for AMC. So that's it. I'm leaving it at that. That's the week for it. I'm probably not going to go through this much of detail again in the future because honestly, it's going to be the same rant. The chart doesn't change. We're just going to keep track for the next few days. But I think between today and the Friday, we might have some big moves up. I like to also keep track of hood. I'm sure some of you noticed and cringed. I cringed too. I like to keep track of hood. Why? Because I'm seeing lower highs and lower lows. Now here I'm seeing a little bit of a higher high. I'm not gonna play it. I'm not playing shorts on it. I'm not playing longs on it. I'm not buying shares. I'm just enjoying the flow of this negative trend. That's it. And it actually does give me a specific correlation with the market in a general sense because again, hood is where most of the institutions are because the institutions are actually backing this up. There is no ape, no matter how much the mainstream media says. There is no ape investor that's inside of hood right now. Maybe they made money and they already left up here, but there's no ape holding it. So what I'm seeing here in hood is that these are basically big institutions supporting their ally. And when I see hood starting to drop, they're getting worried. Hood is the first person that's going to get, you know, the rug pulled by the big institutions because they're going to need that money to cover shorts. So that's why I'm kind of keeping an eye on the hood because I know for a fact that the investors in hood are not apes and they are institutions and they have to pull their money out at some point. That's that. Okay, so let's look at some data. That's all technical. So let's look at some, I guess, still technical like data, but are very sexy or text data. So I've been hearing a lot about SDC. A lot of people starting to talk about it. I feel okay with it. I'm not a fan. Um, Good failure to deliver, 1.5 million compared to 54 million actually lent, 50% of the float. But still, I mean, for a long time it's been failed to deliver. So we do have some crazy 10 million here back in January. May, back from May. But I don't see it having support. So I don't think it's a good play. Even if I wanted to make money from this in the short term, I'm still waiting for the cost to borrow to go up and the utilization to go up. It does have a great potential. 54 million shares need to be covered. Cars need to be returned. But 55% of that is technically the flow of the total possible cars moving and being sold and bought. So 55% of those cars being bought and sold are being returned. So they have a great potential, not in the FTDs, not anymore at least. Back then, yeah, but these have probably already been covered in the previous two growth spurs. Right? We had huge growth here. So now at the price of what, five something? Yeah, five something. I can see it go to 10. I can see it go to 15 maybe if they cover everything at once. But they don't have a lot of FTDs to back that up either. So I can see myself going in maybe with a couple of shares, maybe 500 shares, about $2,000, $3,000 when this reaches about 50, 100% cost to borrow. Potentially watching this number here. Oh, but if you look at the percent change, it is growing. I like that. In the last 7 days, it's grown by 250%. So maybe it has potential within the next 2, 3 weeks. I'll keep an eye on that, but not now. AMC, we know the deal. We're just waiting for utilization to go high, cost to borrow still being kept low, small change down. We're just waiting for that huge pop of cost to borrow before we see the next growth. A lot of shares to be returned. A lot. That's our baby. Next, BBIG. So cost to borrow has gone down. I don't see it having any big movements up soon. I can see it go down for another 2 months until it goes down to 1%. Another 3 months for them to short it down again, and then potentially 6, 7 months before we get to this 50% again. But it is on a downtrend for the cost to borrow. So I think I've left most of my BBIG. Let me see. I only have 50 shares just in case. Yeah, 100 shares between two accounts just in case I miss something, but I'm not missing much. So BBIG is going down. Nothing special there. SBRT has changed to GREE. It screwed me over. I made 7,000. I kept a couple of shares just in case. They switched to GREE, and now I'm down 2,000. So I basically made a profit of 5,000 total. But you know, you gain some, you win, or you win some, you lose some. So that's fine with me. FUV still has a negative change, not looking very good for the near term. Their days to cover is increasing because volume is going down. Not a lot of people are trading it anymore. They still have a good amount to borrow to return, which constitutes to be 32 million of 32% of the total. FTDs are still freaking insane. No, not insane. Mediocre at best. FUV's alright. APPH was my recent fascination, and I like it still. It is having a positive change, 5% increase in cost to borrow. The minimum cost is 11%, which is very forceful. As this increases again, but they have some time before the utilization goes back up. So I can see that staggering for another month or two. But it's building. It's building itself up. Hedges are losing money. And if AMC blows up, then you're going to see a lot of other ones, secondary ones, blow up. APPH will be a secondary that blows up. Not as much as AMC, obviously, because they only have 17 million to cover. AMC has 100 and almost 20. By the time they start covering, I believe they're going to go back to 120, 130, right? So APPH may double in price, maybe triple, but it's not going to go to the same lengths that AMC is. Workhorse. I like Workhorse. Increased cost to borrow, 7%. A staggering 80 million shares, which is 70% of the flow. Their Workhorse is getting there too. Similar to APPH, they might also blow up once AMC itself blows up. But I would potentially just, as soon as I see AMC blowing up, I'm moving all money into AMC. That's it. There's no worthwhile other short squeeze available. They're not going to grow as much. These are just side bursts. What is this? CLC? Someone? Oh, Clover. Clove. 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 A lot of people talking about it. I don't see it too crazy. 50 mil, 25%. Decreasing cost to borrow. I don't like it yet. I give it another 6 months. Yes, this is what I'm in currently, actually. 400 shares in on one account. 150 on a second account. I should increase that. And I did have an option, but I was too early, so I lost money on that. But still, shares are going to be enough. So ATTR is increasing hard on the cost to borrow, and it's getting really ready. The trend is upward. We have another bullish pendant. Let me draw that up. You have another bullish pendant on the way. Positive trend confirmed, bullish trend confirmed. If we break out of this in the positive, and we should, because their cost to borrow is ridiculous. They have to pay exactly the same amount that they're actually spending on all their shares, but they have to pay that interest every day, or at least a portion of it. That's a yearly cost. So technically, when we see Ortex talking about 130% interest, right? That's over a year. You take that interest of how much they like. So okay, if they spent 1 million on their shorts, they gotta pay 1,340,000 for what they originally bought it for. So they're already losing money. But that's in the yearly process. So if we split that 1.34 million divided by the working days, oh, whoa, which is what? 360, no, 5 divided by 7 times 365, 260. So if you take 1.34 divided by 360, 260 times a million, they're paying 5,000, about 5,000 a day. I hope that's the right math. So 132 million divided by 260. Yeah, about 5,000 a day. If they pay it all the way through, they're going to be paying a lot of money. But as this increases, let's say if it gets to 300% cost to borrow, then if they spent a million, they're paying 3 million, which they have to pay on a daily process. They're paying $11,000 a day to hold that short, which over time, it's going to be pretty hard. But Let's imagine, okay, so yeah, we have actually an estimation here. So let's imagine all of these shorts are on the same level. So that's 16 million times 1.34 divided by 260. They're paying $80,000 per day to hold on to their shorts. Not all in one location because there's different people that have shares on loan, right? So they're holding it and they're paying daily, total, everyone together. If you add all of their bills together, they're paying $80,000 a day. So it's not bad for an institution, but you know, the more they hold, the more it hurts. So positive trend, growing potential, bull pennant forming has a very bullish trend to it. So I'm sticking in and I'm probably going to put more money in because I think AMC is going to take a little longer. I think I'm going to ride this ATER wave and then make some more money and put more attendees in AMC. Catapult, I like it. I think this was also a decent long term, but at the moment it is a potential short squeeze. Not a very strong short squeeze, but a good reversal of trend. We still have that gap fill I talked about before. We didn't quite finish the gap fill. You don't see the gap fill here because I'm using Heiken-Ashi, but if I change it to regular, we kind of got to halfway of the gap fill, but we are on a positive trend, lower highs, higher lows, dyslexia. So we still have a nice growth up to 9. So KP Catapult is still a good buy. And not a crazy short squeeze candidate, but it is cooking also. It's increasing high on the cost to borrow. The utilization, there's no more selling pressure available until they find more shares to sell because they can't borrow anymore. There's no more shares to borrow. So utilization is done. They cannot short it, so that's why it reversed in a positive direction because people are still buying it. But I believe there's also a fundamental positive to Catapult, so I'm not 100% on just it being a squeeze, but also a potential long-term hold. Zev, don't remember Zev too much. I think that was a new one like SDC. Negative cost to borrow trend. It's not a lot. It could change back to positive depending on the utilization. Oh, we have a decent 8.2 million current shares on loan, which constitutes 30 million float. Zev's not that great. I hear a lot of people talking about it. I'm not too impressed. The price is pretty decent, $2. Potential growth to 15, 20. I mean, it's decent. But if it does squeeze, it's going to have one or two squeezes, if even two. It's going to have one squeeze and potentially die off. So if you're in this, make sure you plan correctly because you shouldn't be in here for a permanent move long term. But again, I actually don't know anything about the fundamentals, so potentially it could be a potential good long growth because it is sounding like some sort of electric car manufacturer, and they're going to be pretty crazy in the future. Then there's Camber Energy. That one caught my eye. Forget why. Has low interest cost, high borrowed, 44%, no FTDs, zero FTDs as I can tell. Literally no FTDs. So that's not a short squeeze play. But somebody was telling or talking about it before. I think it was a good long-term hold. The selling pressure is low because utilization is high. Shorts need to cover, so that's a good boost growth. I think it's a fundamental play. Let's see, more financials. Balance sheets 2019. Book value per share. Total liabilities to shareholders. Zero debt. Good. They actually reduced their debt. That was it. They got out of their debt. They got 100% cash flow. It is predicted. 2019, they had a 54%. They have a growth in the company. Yeah. So CEI is a positive long-term hold. I'm personally not doing long-term yet. I'm using my current cash and capital to basically exponentially increase my current amount of money so that when I go back into fundamental plays and I can stop stressing over all this crap, I can just leave it, forget it. I have a bot. I have a Discord bot that already measures the relationship between different companies and their charts and sees where there's good uh, profit to low risk, high profit, low risk locations. So I have that bot sitting on standby for when I go back to fundamental plays. But at the moment, it's a great. This is actually a really nice buy. CEI is a nice buy for the long term. I'm just not ready to dedicate myself to the long term yet, especially since we already talked about the long term. Oh, let's look at that SPY. There's the reversal down. That double top is really hard, really coming in strong. Um, uh-huh. Look at that. This top here has a higher volume OBV than this top here, which means that there's less people holding, more people are selling. So yeah, this is a complete reversal. We're going down, guys. SPY's going down. FYI. We may drop back down here to 437. We may have a small euphoria drive up to 440, but then yeah, I see so much bearish territory here. Just so much bearish territory here. Maybe a pennant is forming, but it's a really weak pennant because it's a battle between a pennant and a double top. I think the double top is a stronger situation. Yeah, I don't think this pennant is very nice. Well, get ready for that crash, boys and girls. And I think that concludes my daily, weekly. I'm just doing it weekly, really. I'm not going to be doing this daily because nothing really changes on the daily. Every week something nicely adjusts. But on the daily measure, there's really no reason for me to continue on to give the same bits of data, plus or minus 5% changes that happen on a daily. So this week looks nice for AMC. I am very much liking it. ATER also is very nice. I'm probably going to increase my position in ATER. BBIG is dead. SPRT is dead. Oh, nothing to do there anymore. Oh, Clove. It's nothing really interesting. Oh, and some people keep asking about Naked. I don't think Naked is much. I think Naked just got a community growth back in January, but I was kind of on the bandwagon too. I was like, oh, get Naked, oh, buy Naked. But eventually I got into the data and I saw that it was kind of meh. For instance, 66 million on loan, only 9%, decreasing cost to borrow, near zero FTDs. Yeah, Naked is just naked. There's nothing to do here. So that's it. Enjoy the week. Oh, don't pull out too much hair. Make your decisions. Stay safe. Buy on the support, sell on the resistance, and enjoy the market.